It's hard for everybody right now because we're all trying to figure out what's going on in this craziness of the market. From my perspective, the Fed kind of decided to sacrifice the real estate industry for trying to shore up other ones, possibly where there were more voters. But, that's just the cynical side of me at the moment. Now, whether you're a buyer or a seller, there's issues you want to take into consideration. So, say you're a seller. Are you waiting for mortgage rates to drop before pulling the trigger on selling your home because you're nervous about what you can buy next? Or are you a buyer holding out for rates to drop and come down because you're wondering what to do maybe while you wait for that? The answers to both of these questions kind of overlap in ways that affect your possible decisions. And that's what we're going to talk about on this week's show. I feel your pain if you're either a buyer or a seller trying to figure out what to do right now. If you're a seller, it's hard because you're trying to figure out where you may want to go. And if you're a buyer, you just want to go anywhere at the moment because there's so few homes on the market. So let's take a quick look at both sides of this thing. I look over at my other screen here and you look at different headlines that are going at the moment, and it's, there's so much conflicting stuff going on. The information is kind of everywhere. You have everything from Business Insiders saying that, the housing market downturn will last for a long time. And then you've got Fortune with an interview with Barbara Corcoran saying that U.S. home prices not only won't fall, but will jump 10 to 15% if mortgage rates dip. And I kind of agree with her on that one, by the way. If you're thinking that you want to buy, you just don't want to wait. You're better off buying and then refinancing. It's really a weird time trying to make sense of all of this stuff. There's some, smart guys here. Mohammed Al-Arian, who is the president of Cambridge University, who used to run PIMCO and was the senior advisor at Alliance. He has a great headline here. There's a real issue as to whether or not we've broken the housing market. And it's entirely possible that we've broken the housing market. And that the Fed may have crushed both demand and supply now that mortgage rates are back up over 7.23%. Smarter than me, understands economics deeper than me, probably right. This is a really, really strange time in the market. And this is why I keep on saying it's almost my catchphrase at this point, because I say it so often. Don't look at the big picture. Look at your picture. Look at what's right for you. Look at what's right for your family, because it all comes down to you and what you need as a buyer, as a seller. Because if you're looking at it just on the national basis, off the big, huge picture stuff, it's just depressing. Look at what you can make work for you. There's too many unpredictable factors out there to count on a rate drop. Nobody expected what the pandemic would do to housing, and artificially low rates had a massive unintended consequence. It wiped out housing demand. It just made everything go crazy. And we all know what that's done to the prices too. So look at what's going on in the world. We don't know what the whole Russian-Ukraine conflict is going to do and how that's going to play out. And there's plenty of other problems around the world that don't get as much press as that one. The old political junkie observer in me, as members of Congress, is going to try to do something to get rates down that would, help for the coming election year. Sorry, cynic. There were so many pundits in the real estate industry predicting there was going to be this huge crash and prices would come down when the rates first doubled, and asking prices are still up in most of the country. So if you want to sell, it's a really good time because demand is still high. And I'd also be thinking it's better to sell and shop now going out while the market is somewhat stable than waiting on it, because, even if it's stable in an annoying way, when interest rates inevitably come down at some point, the multitudes of people who are sitting on the sidelines are going to flock back into the market like a rampaging horde. And you're going to be competing with all of them and all the people who've been sitting on the sidelines this whole time. And also, if you sell at top dollar, you can always rent for a while if you have to. A lot of potential sellers are worried too, also about capital gains issues if they sell, and if they can wrap their heads around becoming a housing provider, or used to be called landlord, but politically correct stuff. Making their current home a rental may make sense for a lot of homeowners. Plus, they can talk to their accountant about possible depreciation tax advantages. And this is where having a good financial advisor and accountant is kind of crucial so that you know if it's a good move for you. I'll put a link here in the show notes for an analysis of how rental properties can work out. I just did one for leasing property if you're reluctant to sell. Now, let's look at the other side. If you're a buyer and you're waiting for mortgage rates to drop, what can you do to improve your position while you're waiting if you don't quite have what you need to get into the market at the moment? Obviously, putting more money into savings, if you can, that's putting you in a better position if rates do come down. And that's a smart move. It always is. And for a lot of people, depending on what's going on in the market at that particular time, you can use that money to buy down the rate. And that can be a smart move for a lot of people, especially if you're planning on holding the property for a really long time. And we're still seeing multiple offers on properties, so you've got to be kind of prepared for it. In fact, if the property is in really great move-in condition, you're seeing multiple offers a lot right now still. But properties that need some work are sitting for a while. If you have enough cash that you can handle the deal and also do some fix-up, you're in a better position if you're going after something. So do everything you can to make your offer as clean as possible, because when you're ready to actually buy, you want to be ready to just go. Now, you got to build up some savings. You have to make sure your credit's solid. And yes, that all sounds kind of basic, but you'd be amazed how often buyers find out at the last minute that they aren't actually as qualified for the loan as they think they are. So as you start looking, make sure that you're fully pre-approved, not just pre-qualified. And you're confident you can close on the purchase. You want to talk to multiple lenders because some of them have access to special programs and others don't, depending on who you are. If you're a VA, you've got one of the most solid loans out there. FHA, you can come in with 3% down. There are so many different ways of getting into the market depending on what your individual situation is. People have different situations, and various lenders may have something special that fits your particular needs better than others. So when you have all your ducks lined up, you're giving your realtor more evidence that you're a solid buyer and strengthening their position to negotiate on your behalf. There's a fear that a lot of sellers have that once they get into the process, that the deal could fall out, and that the chance they're going to get more days on market because the house will have been sitting there during the period while they were in escrow with the first property. So there is a kind of tendency to think just go for the cash offer if there's a cash offer on the table. But I'll tell you, one we had a little while ago, it was just a couple of years ago, had the cleanest deal I've ever seen come in terms of what the offer was. It was basically full price, 2-week close with a 7-day inspection period, cash, and the person who was offering on it was both a realtor and a licensed appraiser. So no appraisal contingencies, no anything. And at the end of the 7th day, just as we were waiting for the contingencies to be removed, called and said, I'm going to drop out. Sorry. And they were within their right because, decided it wasn't going to work for him. And these things happen. And that's one of the things that it doesn't always end up being the cleanest offer from that perspective. Sometimes you want the one that's just organized, has their ducks lined up, and is enthusiastic. The people who ended up buying it were the perfect buyers. They loved it. They are there now, and they will be there for years and years and years. And they were the right buyers. So it isn't always the deal that seems the obvious one. There are multiple reasons why someone becomes the perfect buyer. And so as long as you make sure you have everything lined up if you're the buyer, you're going to make the seller feel more confident. If you're the seller, you want to make sure everything is checked off. And, and that comes all the way down to simple things like make sure your agent actually talks to buyer's lender if they're going to be using a loan, which, most people still are. Though a huge percentage of deals where we are in cash just because the mortgage rates are high, so the cash buyers are out. If you can afford the property you like in the current market, buy it if you want to. Rates are either going to come down and you can refinance the loan, or they'll go up and you'll be glad you locked down the payments. I've actually heard rumblings, and you probably have too if you're watching all this stuff. There's possibly 8% mortgages coming up in the short term. So if you want to move and the numbers work, go for it. Especially if you're downsizing or moving to a less expensive state. A lot of people put their lives on hold for the last 3 years, and it's, in the grand scheme of the world, still better for most people to own something because of the tax advantages and because it stabilizes one of their biggest expenses. And for those of you feeling stuck on the sidelines out there, while the rates are so high, take heart in the fact that this stuff is all cyclical, and there'll be another opportunity market soon. We're watching the market all the time to try to help you make sense from all the doom and gloom that's out there and try to find opportunity within whatever's going on. So hit that subscribe and like button, because that helps the algorithms and helps my new channel. And I appreciate that. And I hope that I'll see you on the next one. Have a great day.